Welcome back to the Ultimate Trading Podcast for beginner traders. I'm Isabel Maria, and today we're diving deep into a lesson that can make or break a trading career, avoiding the temptation to chase losses. If you've ever sat in front of your screen after a losing trade and felt that pang, the urge to immediately recover what you lost, you know exactly what I'm talking about. That feeling, that pull, can lead to a cycle of impulsive decisions that's hard to break. Today, we're going to unpack why chasing losses is so dangerous, the psychology behind it, and how a disciplined approach can protect your capital and your sanity. Trading is exhilarating, but it's also brutally challenging. Losses are inevitable. Every trader, no matter how experienced, encounters them. The key difference between those who succeed long-term and those who don't is how they respond. Chasing losses happens when traders try to recover their previous setbacks by entering hasty, impulsive trades. Instead of sticking to their trading plan, they let frustration, anger, or desperation take control. And here's the tricky part, it's almost always emotional, not rational. It's like trying to patch a leaking boat by punching another hole. You're reacting instinctively, but you're not solving the problem. Psychology is at the heart of this behavior. Loss aversion plays a big role. Traders feel the pain of losing more acutely than the joy of winning. That sting drives irrational attempts to recover losses quickly. Overconfidence often follows. A trader might think, I can outsmart the market and get it back in the next trade, ignoring the fact that the market doesn't care about your ego. Fear of missing out can push a trader into trades without analysis, worried that the opportunity to recover will vanish. And then there's revenge trading, wanting to get back at the market itself. All these emotional triggers combine to create a perfect storm for poor decision-making. The consequences are serious. Impulsive trades without proper analysis almost always result in more losses. Emotional burnout sets in, and constant stress clouds judgment, making rational decision-making nearly impossible. Aggressively chasing losses can deplete your trading capital quickly, leaving you unable to continue trading effectively. Discipline crumbles under the pressure, and that once clear trading plan falls by the wayside. Suddenly, you're trapped in a loop where emotion dictates every decision. Let me tell you a story. Mark, an enthusiastic trader, started his journey with significant capital and high hopes. In the early days, he had a streak of profitable trades that boosted his confidence. Then the market turned unexpectedly, and he faced a substantial loss. That's when the impulse to chase took over. Mark increased his trading frequency, hoping to capitalize on short-term movements and recover his losses fast. Without proper analysis, these trades resulted in more losses. The stress mounted. He became frustrated, desperate, and increasingly emotional. His capital dwindled rapidly, and he abandoned the strategies that had initially guided him. He was spiraling, and it felt like there was no way out. But here's the turning point. Mark realized he needed a disciplined approach. He paused and committed to regaining control over his trading. He built a detailed trading plan outlining criteria for entering and exiting trades, risk management rules, and realistic objectives. He set achievable goals grounded in careful analysis instead of the desire to instantly recover lost capital. Stop losses were no longer optional, they became rules. He limited the capital per trade to protect his portfolio and began practicing emotional control, using breaks, mindfulness, and mental exercises to maintain clarity. He started a trading journal, tracking every trade, every emotional reaction, and learning from patterns in his decision-making. And he sought guidance from a trading coach, someone who had lived through the highs and lows of the market, to refine his approach further. The results were remarkable. With a disciplined framework in place, Mark's trade selection improved dramatically. He wasn't jumping into positions on impulse anymore. His risk management protected his capital, keeping losses contained and allowing for recovery over time. He became emotionally stable, making decisions from a rational place instead of a reactive one. His trading consistency improved, and he avoided the roller coaster of emotional and financial setbacks that had previously dominated his trading. Step by step, trade by trade, Mark regained control, preserved his capital, and gradually restored profitability. So, what's the takeaway here? Chasing losses is one of the most common pitfalls for traders. But it's entirely avoidable. The key is discipline. Develop a robust trading plan, set realistic goals, implement strict risk management, practice emotional control, keep a trading journal, and don't hesitate to seek professional guidance if you need it. Each of these steps reinforces your ability to trade strategically rather than reactively, and each trade you take from a place of discipline builds resilience for the next. Think about it like this: the market doesn't care about your emotions or your desire to get back at it. Your capital, your plan, and your discipline are what will carry you forward. Remember the words of Tudor Jones: the secret to being successful from a trading perspective is to have an indefatigable and an undying and unquenchable thirst for information and knowledge. That thirst isn't just for market knowledge, it's for self-awareness, discipline, and the kind of clarity that stops you from chasing losses. As we wrap up today's episode, I want you to reflect on your own trading habits. Have you ever felt the urge to recover a loss impulsively? What did that moment teach you about your emotional control, your risk management, and your adherence to your trading plan? I'd love for you to share your experiences in the comments down below, because understanding these moments and learning from them is exactly how we grow as traders. Next week we'll continue our risk management series with another critical topic that builds on what we've discussed today, diving into the practical nuances of position sizing and how it interacts with psychological discipline. Until then, remember, disciplined trading isn't just a strategy, it's your edge in the market. Stay patient, stay analytical, and most importantly, stay in control.
Thank you for listening to the 101 Trading Tips in the Ultimate Trading Podcast, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading!